Okay, great. Let's get rolling. Again, for those that got in early for the fourth time, my name is John Grubb, the Chief Operating Officer here at the Bay Area Council, and thank you very much for joining us today. This is the Bay Area Council's third webinar in 3 weeks. I think we're starting to learn a little bit more about how to do this the right way. Hopefully, we're really happy that you've joined us today. We're going to do less presentation and a lot more back and forth Q&A, which I'm going to introduce our all-star panel that we have here, and I'll have some questions prepared, but it's really going to help out. We want to be answering your questions directly, the participants in the webinar. And so to ask questions, you'll at the bottom of your screen, there's a Q&A panel where you can fill in and submit questions, which we all can see. And so that'll help us because a lot of the questions I think are pretty technical, and technical specific questions are welcome and fine, because I'm sure that if you're facing them, it may be something that others are facing as well. So that's going to be our process. Again, you're not able to ask verbally the questions because we're doing this in the webinar style. So you need to actually write in your questions for us to be able to see them. So last week, US unemployment claims came in at 6.6 million unemployment claims. And that total job loss in 2 weeks is about 10 million Americans that have lost their jobs, which is just a staggering and a sudden blow to American workers and to the US economy. When we add that to this week's report, what we anticipate when that comes out on Thursday, the 3-week loss could blow past the 15 million jobs that were lost in the entire Great Recession from 2007 and 2009 in 3 weeks. The greatest of the new unemployment claims were here in California, unfortunately, which processed an estimated 880,000 claims last week. And that figure is up from the 186,000 the week before. This volume, it's hard to these numbers to have context, but it's about 21 times the typical volume. And what that means is that 1 in 6 job losses right now are happening in California. Now, this may spread to the other states, but right now a lot of pain is being felt here in our state. So the government has created a $2 trillion Coronavirus Aid, Relief, and Economic Security Act. It's called the CARES Act. And of that, about 350 billion is for small, quote, small business. And we are now hearing reports, this is just 2 days after it opened, that the funds are exhausted or projected to be exhausted and are going to need to be replenished. And there's also been folks saying that from the federal government, they're planning to replenish those funds. That's good news. The state of California also has some programs that can help, and we're going to get into that during this webinar. In some ways, these federal programs are a success, and in other ways, they are breaking down. What's clear is that in the Speed to Act, many have gotten very confused. So today, we're going to dig through that and try and clear up some of the confusion. Again, I would urge you to submit questions in a written form into the Q&A piece so that we can start to answer them. We really have, it's a total blessing, the panelists that we have today. And I'm going to go through them. We've got Edward Webb, and we've got Maria Earley, and we've got Isabel Guzman, who have joined us. I'll introduce them in more detail when I lead off for each of them. But I'm going to start with Edward Webb. And so Edward is a group leader at Burr, Pilgrim, Mayer, BPM. And he's someone who gets really busy during hard economic times because he has particular expertise in restructuring and problem assets, and there's going to be an awful lot of those. That's just the tip of the iceberg of his 30 years of experience, but rest assured when Edward talks, he knows what he's talking about. And so I wanted to ask Edward to start with a little bit of an overview of these SBA programs that are available, and we'll start to dig in more after that. So Edward, please take it away.
Thanks, John, and it's nice to be here. So let's talk a little bit about the CARES Act loan programs. And if you could cue the slide up, I think that's going to help. There's a lot of information for people to see here. It's hard to believe that it's only been 10 days since the president signed the legislation, and it's been a lifetime since then. We have been dealing with dozens of clients at BPM who have been seeking help in figuring out ways to participate in what's called PPP, the Paycheck Protection Program. And as you can see, there are fairly broad parameters as to who gets to participate in this. Clearly, it's designed for small business. Some of the problems that people have been experiencing relates to determining the loan amounts. This is a program where the participants are coming in and they are setting the loan amount that they're looking for. Broadly, I should say that the program is being distributed out through FDIC approved institutions. And we'll get into it a little later. Not all these institutions are equal in how well they know how to manage these types of programs. So you're going to see significant differences there. The details of the program are in front of you, and I don't just need to read the slide. By all means, write down your questions and feel free to hit me with whatever detailed issue hits you. I will say there at the bottom, there is a mid-sized business program which has been identified. As yet, the guidance hasn't come out for that. But so that is for the businesses who don't qualify for PPP. It's still going to be a very generous program, but we don't know exactly yet what it's going to look like. John, I think that probably, gives us at least a quick overview of the plans, and then we can get in some more detail.
Okay, great. Thanks, Edward. So I'm going to turn now to Maria Earley. So Maria is a partner at Reed Smith. She has decades of experience working in and with the federal government on financial issues. I would say it's safe to say that if there's a financial issue out there, it seems like she's worked on it, from mortgage to consumer protection to credit reporting and really so much more, stuff that I don't understand at all and she knows everything about. But Reed Smith is one of the biggest law firms in the United States and in the world. And when they created a task force to work through these SBA programs, they put Maria in a leadership role on it. So we're very lucky to have her. Maria, so Edward gave a great overview of the programs, but as I mentioned, there's a lot of confusion. And so I'm wondering, what are some of the top questions you've been helping clients navigate to get through their confusion that you've been seeing?
Sure. Hi, everyone. Thank you. That was so nice, John. That was like the nicest introduction ever. And just for everybody who's participating, I am a San Francisco native. So I live in Washington, D.C. now, but I was born and raised in San Francisco and still have majority of my family there. So it's really nice to be presenting to this particular group. And just to highlight how quickly this stuff is changing and how quickly we're getting information, I was checking my phone just before I was unmuted, and I got an alert that Mnuchin, and I don't know if this is, I haven't been able to verify this, but I'm getting alerts that Mnuchin just asked for another $250 billion for this program, and the Senate is slated to vote on Thursday. So again, that just came through my phone, but I wanted to give you guys a sense of how quickly we're getting information. Couple of things that we've been hearing, we've been advising clients, pretty much nonstop since the program was announced and information started becoming available. Some things you guys should know: Thursday night, the regulations about the program rolled out. Friday, the applications started to be accepted by the banks. Friday night, additional information came out about affiliation rules. We'll talk about that a little. And then last night, another set of FAQs came out that actually clarified some of the gating issues that we've been seeing. So what are some of the gating issues? One of the big ones, there's two essentially. So one of the big ones is, am I a small business? Is it 500 or is it something different? Based on the current guidance, again, these were FAQs that came out last night. There's essentially two ways to do this. And this is the way it's been all along in the SBA program, but you have an NAICS code, a NAICS code, and it's either your annual receipts or it's a head count that might be different than 500. It could be greater than or less than. And so what the FAQs clarified last night is that if you have more than 500 employees, you still qualify as a small business if, one, your NAICS code assigns a higher head count for your business, or two, your NAICS code assigns an annual receipt number and you're within that number. That was important because up until last night, we weren't sure whether the annual receipts test was still in play. The FAQs make that very clear. They also reference a alternative test that you could use. So that was very helpful. The other big issue that may impact some of you that are on this webinar today is the affiliation rules. This is by far the place we've been giving the biggest amount of assistance to our clients, particularly because we have a lot of VC-backed and PE-backed clients. And so some good news for VC-backed entities. Well, let me back up very quickly. If you are VC-backed or PE-backed, based on the affiliation rules, you might have to aggregate for headcount purposes, not only your business, but any other portfolio business that's underneath the VC or PE. And there are two provisions in the SBA regulations that deal with affiliation. One of them was better for VCs. The SBA and Treasury clarified that the one that's better for VC-backed companies is the one that's in play. But for just at a broad level, and then I'll stop talking after this, but just at a broad level, to understand the affiliation rules and whether or not you need to aggregate headcount with other portfolio companies or other companies that are affiliated under common ownership is really, you look at ownership. So if you're owned, there's majority ownership, 50% or more, you will likely have to affiliate with and aggregate for headcount purposes the employees from the other companies that are owned under that owner. Two, if it's a minority shareholder and they have an ability to control the company, you will then have to look at the companies that are underneath that minority shareholder and potentially aggregate. And that also includes not just US-based employees, but foreign-based employees. So I said a mouthful. I will stop now and let John kick this over to the next speaker, and then we can address any more detail and questions.
Great. Thank you, Maria, very much. That was great. So by the way, there's already been 3 questions that have been submitted, and we're going to get to every single one of them. We're just doing the intro stuff right now, which is really important. So as I mentioned at the start, we don't just have a federal response, we have a state response, and California is here to help too. And leading that for Governor Newsom is Isabel Guzman. She's a director of the Office of Small Business Advocate in the Governor's Office of Business and Economic Development, otherwise known as GoBiz. And so the governor attracts top talent. That's been one of the marks of Newsom, and Isabel is no exception. Among her work in and out of government, she has been a leader in the formation of a bank that she was associated with. She also was a deputy chief of staff at the U.S. Small Business Administration from 2014 to 2017, pretty recent stuff. So she really, just like the other 2 panelists, really knows what she's talking about when she's talking. So Isabel, could you share what the governor and the state are doing to help out companies?
Thank you. Thank you for inviting me to join today. Yeah, as was mentioned, Governor Newsom has stepped in as well in terms of our state response for small businesses. Last Thursday, he announced in anticipation of the PPP, the Paycheck Protection Program being rolled out on Friday, some additional state measures that could help. We want to make sure that small businesses don't fall through the resources that are brought on at the federal level. First and foremost, we want to make sure they're accessing it. And so amplifying, connecting them as much as possible to these resources so that California businesses can tap into federal resources was, of course, a top priority. but recognizing that it's not necessarily going to be a fit for all. So the governor did announce that the California Department of Tax and Fee Administration would be rolling out a small business taxpayers benefit that would be in effect a 12-month zero interest loan against the sales tax obligations of the companies affected. And so the goal is just to provide a bridge loan and immediate access to cash so that those payments to sales tax through CDTFA would not be immediately due. And so that hopefully provided additional financial relief on an immediate basis. And then in addition, recognizing that SBA's eligibility is restricted to some small businesses, and in addition, some will just not qualify. The governor announced that we would be recapitalizing iBank's Small Business Finance Center with $50 million to go to the Small Business Disaster Relief Loan Program. Specifically, that's run through the financial development corporations throughout the state who partner with CDFIs, the Community Development Financial Institutions, who have a specific mission and track to underserved communities specifically. So the focus of our program is to anticipate that either low wealth or undocumented populations would not have the necessary documents or qualifications to meet the SBA's programs, but could still access funding to keep their businesses going, to keep their employees employed. Those were the programs that were rolled out. Of course, broadly, we've been tracking financial and tax relief with multiple announcements. And I think the biggest thing would be to encourage you, since these things are changing daily, to check in to the COVID-19.ca website on a regular basis, where these announcements, guidelines are put on a regular daily basis. In addition, our website, business.ca.gov, tailors a lot of that information for businesses. It includes resources, and one that I'd like to highlight today is our business centers. So the small business development centers, the SBDCs, the women's business centers, a lot of the federally contracted centers are also funded by the state to expand their service offerings. And these centers are really critical to helping businesses navigate to see what loans are right for them, whether it's that Paycheck Protection Program or perhaps just an EIDL, the Economic Injury Disaster Loan Program from SBA. In addition, they can tap into what workforce resources there are through Employment Development Department. So those centers are available at business.ca.gov/centers, but as well just on our COVID website at Go Business site. So I'd encourage everyone to just tap into those resources and call local centers for that advice. That's what they're trained by the federal government as well as us in terms of accessing information and resources in a timely manner and to help them walk through the process.
Great. Okay, thanks, Isabel. So thank you for what the state is doing. We're going to start diving into questions immediately. So because there's some great ones that have been already submitted. So the first one I'm going to read out comes from James Mullen. I hope it's okay to read your names out. Who is asking about the limits on payroll costs under the Paycheck Protection Program. And in terms of premiums on health benefits, such as ancillary benefits and what's included, because obviously some Bay Area employers are pretty generous this way. So I'm going to ask Edward if you could address this, but I'm not. But if Maria or Isabel, you want to jump in on that, that's fine. Could you talk maybe a little bit, Edward, too, about what are some of the ancillary benefits that could be included? I know you don't know this person's specific case, but just as a general rule about this.
Sure. Basically, when we're helping clients put their loan requests together, we are making it a fully loaded payroll cost. And so the federal employment taxes can't be included, but state and local can, benefits can, retirement benefits can. There is a $100,000 cap for salaries. It's treated as a true cap. So the benefits that those folks receive up to 100,000 count in that calculation, and then just the amount over does not.
Okay, great. Thanks. I'll let you, Maria and Isabel, let you shout out if you want to answer anything specific about that. But if not, I'm going to move on to the next question that we've got here. This one comes from Joe Burgard, which, I've heard this question a lot. So about the definition of a seasonal employer. Obviously, there's a lot of that in California too. So maybe Maria, I could turn to you on this one because I think this is something that you were referencing in your intro. So any guidance on seasonal employment?
You know what? I'm going to have to punt on this one because this is one that we haven't really seen. I know that there was something in the FAQs about that this morning, but it's not something I'm focused on. I don't mean to dump everything on you, Edward, but if you've seen this, maybe you can provide some more advice on this or guidance.
We have seen it, and there are a couple of different ways to look at it. At least this is what we've been urging our clients to do. If we have circumstances where it is true seasonality, and so people have rolled off of their employment, and that was typical for the actual ordinary course of business, and then is expected that they're going to roll back on, then it's probably going to be difficult for those companies to calculate those figures in for a PPP amount. If you have situations where companies are using 1099 employees and really it's a way of extending their payroll, then we have encouraged using those in the calculation. Independent contractors, true independent contractors, are not included because they have the ability to apply on their own. And it kind of gets at a bigger point, and I'm interested in what you guys have to say about this. What we have seen is that the banks are making determinations, and they are exercising a certain amount of discretion in this. And so we are encouraging our clients to make requests that perhaps don't, at least initially, appear to be under specific guidelines, with the recognition that there's a spirit to this and an intention which is in place, which is designed to put money in the hands of employees. And so we are trying to help them tell a story to the banks that accurately expresses the way their business is run, so that they can get the funding they need so that they can keep their people working, which is the purpose of this thing. I'd be interested in your take on that.
Go ahead, Isabel.
Thank you. Yeah, no, I would agree. I mean, the intent is definitely to focus on employers and keeping folks working. I think what's difficult for banks to navigate, and for small businesses as well, is just that the rules and the FAQs are continuing to come out, and assuming that there'll be additional SOP guidance, standard operating procedures from SBA at some point to the banks. And so just all of that, all of those details will finally help banks determine this. I'm hopeful that they're potentially going to fund more in case those banks and those customers of those banks who were not able to get in quickly on Friday or during this week still have an opportunity. But I do believe that's the intent. It's just that it's very difficult without all the details, and it's changing daily, as we know.
Yeah, and if I could add to that, what we've been trying to help clients do is just disclose fully. We've been going through these applications, and it's really hard to know sometimes. And just to give you a real life example, what I was talking about with the 500 employees, where it was unclear whether or not for this particular industry, they had a NAICS code that gave them, annual receipt amount, and they were within that, but they were slightly over the 500. And so we said, well, just disclose it. And they got approved by the SBA on Sunday morning, kicked back to the bank for an affiliation analysis. And the bank said, you're over 500, you're out. And they reached out to me this morning in a panic. And I said, don't worry, FAQs just came out last night and you can go back to your annual receipts and you're going to be okay. And so then they were able to sort of go back to their bank and, you know, restart or reopen the application. But it's a very dynamic situation. And, you know, on the one hand, we want people to get this money, but on the other hand, we do think it's important that there be full disclosure, you know, because if a bank, this bank was a very small bank and they're doing things manually. A lot of the bigger banks are automated. No one's going to be looking at this. And if you haven't disclosed something important, you know, today everybody's panicked and wants to make sure that their people are getting paid so they can feed their families. But in 2 years or 5 years or whenever somebody goes back and looks at this, you want to make sure that you've disclosed everything you could, so that nobody does a look back and, you know, from a different lens, points fingers. And one other thing I'll say is that the FAQs that came out this morning or overnight, there was a specific FAQ that said, what happens if I applied based on the regs you put out Thursday night, but now I'm seeing something different in the FAQs, and they say in there, you're fine. Just, you're free to apply based on the information you have at the time. If your application is still being processed and you have an opportunity to amend, do that. But if not, we're not going to ding you, you know, because you were applying based on what you knew at the time, and then we clarified later. So that's my advice to everybody is if you're not sure, just disclose everything you can and go forward.
Okay,
Boy,
great.
I'd really like to just add to that. I couldn't agree more with that. That has been our experience with our clients. The amount of disclosure and transparency will only help as this thing evolves, and that's probably the best place to get professional support in the process and getting another set of eyes on your application.
Great, thank you. So there's another question that came in from Jay, who is asking about basically when do you date the payroll, and how are you able to pick that payroll? I'm assuming you want to try and hit the largest one that you can. And so they're asking, or he Jay, can you go back in time? You know, when do you pick that actual date? Maybe Edward, you could start on that.
I'm happy to, and I'd be interested also in hearing what Maria and Isabel are experiencing. We have gone back with our clients and looked at their 2019 payroll. We have helped them determine what the base is in terms of their employees, and then we're calculating the amount and coming up with the average monthly. And then once we have that number, we're taking it times 2.5 to help determine what the loan amount is. And the regs, we have seen this also to say that it's a trailing 12-month view. So you might look from March 31st back a year. That can be difficult for people. And they probably don't have their 941 information for Q1 yet. They certainly don't. Whereas they have verifiable records for 2019. And so our clients have had pretty good success with that.
Okay.
Yeah, if I could just add to that, this was another place where there was a little bit of confusion. On one hand, it said, look at 2019. Then if you look at the application, it's a trailing 12 months from the date of the application. We've seen it both ways. Again, it's really just about, you know, what can your organization gather? You know, I guess in some ways it could also be what would be, you know, most advantageous, but I think both have been accepted. We've seen both be accepted, but we have seen some clients be able to go from, you know, March 31st of 2020 back a trailing 12 months. So I just think it you know, either one works. But again, there's just been, you know, the application says one thing. I think the application says trailing 12 months, but I think the act or the regs, I can't remember, or there were some FAQs that came out in the interim, different FAQs that came out last Tuesday that said something different. So again, pick either or, whatever you can pull. and what, makes sense, and just make sure that it's right and defensible.
Great.
I
So
think this is where the,
go ahead, Isabel.
or the centers or the advisors that are supporting on this is critical. But right, the the interim final rule just said following methodology, which is one of the methodologies as from the last 12 months. But it's so obviously there's still interpretation, and I'm sure they'll clarify. But if you're aligned with your bank and providing the detail necessary, then it would something that would be considered as at time of application knowledge at that point.
Thanks. So I have two questions that I wanted to tee up, and then I'll get back to the written questions here. But one question I've heard a lot is, do you have a recommendation on banks to work with? Some of them have already announced that they're oversubscribed. Are there particular ones that one should work with? Is it best to work with your primary bank that you have yourself? Any thoughts or recommendations on the best banks to apply with? I'll let whoever jump in on that one.
I don't want to hog all the airtime. We definitely have some experience with this. If you had asked me on Sunday if I thought that Wells was going to opt out of this at a $10 billion cap, I'd have said no way. They're the biggest SBA lender in the country. What we have seen is that there's great value to going to the bank where you have a relationship. Some of the banks have limited the acceptance of applications to their existing customers. We are aware of some that are taking applications from non-customers, but they get into a queue behind the existing customers. There really doesn't seem to be a kind of a true definitive way to do this. So if you know somebody, boy, that's a great advantage. If you don't, and you're able to reach out to a service provider who might be able to help you and steer you in that direction, that's great. Otherwise, get on the phone and connect with a person if you can. I would encourage you to not leave this to electronic filing.
Yeah, and if I could share something there as well, I echo 1000% everything Edward just said. We have seen a lot of success with these small, tiny institutions where they're kind of doing things manually. We have one client that banks with Capital One. They are still not clear whether or not Capital One has opened its portal and is really, what Capital One is doing. So they went to this tiny little bank. I didn't even know what it was called. And they already got the and I didn't even realize that the process was that the SBA would be giving some sort of approval, but they got an approval Sunday morning, and they've been talking to a person, an email from an actual banker. Here's another thing, and this might be a little controversial. I don't know, we've seen some clients do this as well, where they've submitted to more than one bank, and wherever they get the response first, they pull back the one that they submitted. I'm not sure that that's, the best thing to do. I think it's better if you can just get a contact at a bank and get in there. But this was early on when we all thought the money was going to be gone on Friday. And that hasn't proven to be the case. And that's another thing I'll say, which is, the money isn't flying off the shelf as fast as we thought, in part because it's just a lot harder to stand up this type of program in a week. I mean, it's incredible. I know there's been a lot of horror stories written about it, but from where I sit and having been in the government, this is a win. I mean, the fact that they actually opened up the application process on Friday and got some applications through is a win. No, it hasn't been perfect, but remember, everybody's working around the clock to get this money out. So anyways, I would just say, work the phone, see who you can get on the phone. We've heard really good things about KeyBank. KeyBank's a big SBA lender, and they seem to have a very smooth process. But again, it's just hit or miss, and you just, get as many people on it as you can to get a contact with an actual bank to get this through.
And what I would add is that, Bank of America, BB&A, Live Oak Bank were first in on Friday, but I understand that a lot of the 1.8 billion that at some point the Treasury Secretary had tweeted about was through community banks. And so you definitely just have to go to your local lenders. I will add that the Community Advantage lenders that are on SBA's 7A platform are also eligible lenders. And so those are nonprofit lenders that exist. And so one way to verify which lenders are eligible and participating is at SBA's website. They changed the lender match tool that used to match you directly with a lender, and they've now converted it, or just replaced it with a Paycheck Protection Program, Find a Lender program, so that you can, see which lenders are available. You're not matched, but at least you have a list. And so if you go to SBA.gov, just their Paycheck Protection Program site, you'd be able to find that, and that was just stood up.
And then one of our participants has flagged, which is really important, that credit unions also, it's not just banks, but also credit unions that have an SBA program are available to help you out on this. Another question I had was, the program we've been talking about, the Paycheck Protection Program, isn't the only program that the SBA has out there. There's also the EIDL, and I'm forgetting the acronym, but it's another program. And what I wanted to ask is, the other major program here, if you apply for one, can you apply for others? Would you recommend folks apply to both of them in order to see which one they can get funds from, or are they cut off if they've used one and can't get it from the other?
My understanding, the Economic Injury Disaster Loan Program is a great program that's been available in the state. The state was first in to apply, and we were able to get the whole state declared. They actually switched and made it easier for an entire state versus county by county declaration. And so that program is up to a 30-year term, 3.75% for businesses or 2.75% for nonprofits. But what's good about it is that you can access a $10,000 cash advance, which is available whether you are proven to be eligible for proven to be approved for the loan or not. And so it's basically a grant. They're calling it an advance grant. It is that 10,000 would be a duplication. So if you were to later get the PPP, you can get both. But if you were later to get the PPP, that 10,000 would be deducted because obviously that EIDL loan, EIDL, would be available for other expenses outside of payroll. And so you can get both, but the 10,000 is duplicative.
Mm-hmm.
Okay.
One thing I would add there, that I think one big difference that might matter for those of you participating is that, and Isabel, please correct me if I'm wrong, but my understanding is that there's a personal guarantee involved in the EIDL loan process, but not for the PPP. And I think that has been a gating issue that has been, subject to a lot of discussion with at least my clients.
What they did this last round of guidance is that they increased that personal guarantee amount from $25,000. So anything under $25,000 was never, collateral was not required. And now, and personal guarantee, and my understanding is they bumped it to $200,000, and I believe that's on both collateral and personal guarantee. But we need to verify.
Great, thank you. So there's John Rule has a question. I hope I'm pronouncing your name right. Which is that once a loan is approved or quote approved, do companies have a choice of when it funds? What 8-week window they would like to have funded, or is that a programmatic choice?
We have not had that experience yet. My reaction to that is that might be a no. Because once the banks are getting funded, then they're probably going to want to originate the loan and get the money out there. But that would definitely be a good question for the bank.
Yeah, I don't know the answer to that either. I think, again, as we move through the various stages of this program, we're going to move from, do I qualify? How do I fill out the application, to when do I get my money? Do I put it in a different account? I'm starting to see some of that. How do I keep track of how I spent the money? We're going to start to shift to those kinds of questions. And we just haven't seen that yet, but I suspect that there will be additional guidance either from likely from Treasury and the SBA, to help guide the banks and then applicants for how to sort of administer the funds.
Okay, great. Thank you. So there's another question here from Guy who talks about the loan period for the overall process of the payroll, but also lease and utility costs. And how is that defined? So Edward, you talked a little bit about a sort of rolling 12-month approach to this, but what flexibility is there to pick obviously the one, the most advantageous one for the companies? What flexibility do they have in that?
If the question is as it relates to what happens once the loan is approved and the origination date has occurred, so there's an 8-week period in which they can make payments for payroll and also other necessary expenditures, utilities and rent payments like that. And once that period is done, then if there are remaining funds, the amount of the loan is going to get termed out for a 2-year period, and it carries a 1% rate of interest. So it may be that I haven't fully answered the listener's question, though. So I don't know if a follow-up comes through. We can do it.
Okay. Okay, thanks. So this one's probably for Isabel, but others could weigh in. So Alejandra Rincon, I think it is, asked, how do the SBA, the federal programs, interact with the state and local programs? And she particularly references San Francisco programs, but obviously there's Alameda, Santa Clara, a lot of others that are out there that are offering support. And can one small business apply to multiple sources, or do they have to pick the best one for them?
Guidance from SBA does not say anything about prohibiting you duplicate the benefits with the state or credit elsewhere. So understanding is that requirement was waived, and so correct me if I'm wrong, Edward, on that one. If so, your state, sure, I mean, the state program was always operated as a bridge loan to SBA, so you can definitely apply for the state program, the guaranteed program that is through iBank Small Business Finance Center, and then city programs. There's lots of them opening up around the state, as well as a state disaster relief fund that CDFIs have launched, and there are a couple of different ones on that front. So you can definitely explore those options.
Mm-hmm. Mm-hmm.
Great. Any further on that, or
no?
Okay. Okay. I guess I have a question. So the programs are likely to be replenished and potentially tweaked, and I'm wondering from each of your perspectives what you would change about the program going forward to make it more successful or easier for companies to participate in, or if there's something, some sort of expansion. I would humbly mention 501c4s like the Bay Area Council were excluded for reasons that we don't really like. And I don't think are really good policy decisions. So C3s and others were included, but we weren't. So I'm just going to self promotion there. But what are things besides that you would change going forward in the program for if they approve something new? And I'll start. Why don't I start with you, Edward, and then we'll go to Maria, and then we'll go to Isabel.
Okay. Maria said something earlier that I really appreciate, which is it's only been a week. This is a win. We've done something very significant here, and I think we should all feel very good about that. One of the things about this program that I like the best is the decentralized nature of it. I think it makes a great deal of sense to put what I'll call the credit decision in the hands of the bankers, because they're the folks who are trained for doing that, and they're also closest to the customer, and so they're able to address the specific needs more effectively. Clearly, with time, we will improve communications. We'll improve the flexibility with which people are able to make applications and actually get the funds. The types of questions we get are very similar to the types of questions we've gotten this morning. They're very detailed, and people have specific issues they're trying to address. I'm very hopeful about this and actually very bullish on the way this is working and the way we expect it to keep working.
Great. Maria, what about you? What would you change or expand, or how would you change it going forward?
To me, the biggest sort of miss here, and again, this was all happening so fast, but we did not include FinTech at all. Both big, so the PayPals of the world who serve so many small businesses already that already know them, that could deploy some of this money really well, I think. And some of the smaller startups or smaller, companies that can do the plumbing and can work with some of these banks behind the scenes and have platforms and ability to, integrate quickly and can be nimble. New FAQs come out, they can run some more code and they can update quickly versus having this all be automatic. I think Marco Rubio has been tweeting about this a lot. He knows that this is a gap. I think there are a number of, I've even heard some of my clients trying to get, relationships going on the FinTech side, but we have the ability to use technology. We know that big banks haven't always been the best at deploying, technological solutions, but we do have a whole sector that is good at that. I would like to see the FinTech world be part and parcel, whether it's decentralized and they're doing it, one-off with smaller banks, or we have an effort by the SBA and Treasury to get some FinTechs integrated. I think it would be a much better process for everyone.
And Isabel.
A couple of things that I would add. I mean, that I think that the Treasury and SBA have already started looking at in terms of how we continue to move this program forward, but just ensuring that there's liquidity in the marketplace so that these banks can jump in and that more small businesses can access it. It's been very stressful and frantic for a lot of them that are just hoping to try to get that money before it disappears. And I know that we've lengthened the process by which that money has been drawn down, but I do think having that secondary market would be helpful. The Treasury, the Federal Reserve rather, tweeted yesterday that they would be looking at that. So with additional guidance coming out this week. So I think that will help. The second thing that I would say, agree on the FinTech, I think a lot of banks have deployed an automated system already in order to do so. And you do see some folks stepping into it. Funding Circle has an inquiry landing page that you can get information. Cabbage actually has an application. So you see some of them being the face, which potentially would be financial partners. But it'd be interesting to track this to see where it goes. It seemed like there was some indication initially that they would be included, but I understand that they are not, and so that it would need to be through a bank relationship, but it seems like those are starting to happen. So I think everyone should track that and see how it goes with this next CARES Act too. And hopefully we'll see more action so that these loans get into the hands of small businesses quicker and more accessibly.
Do you, sorry, I meant that as a closing question, but I have one more, which is there, how close to the total amount of funding that you think will be required to sort of fill this need have we hit? Are we halfway there, a third of the way there? Do you have any, and maybe you can't answer this question, but is there any sense of, or any projections that you all have read about how much more, quote, backfilling of funds that we're going to need to actually complete the purposes of this measure, of this act, this portion of it? Any sense of that? I mean, how about this? Are we full, are we fine? We've got it all, or no, are they going to need to go back a couple more times?
I think it's
that was
on coronavirus overall. And I think that's what, our actions, and I think small businesses are in their community. And so it takes it back to our actions and being able to flatten this curve and ensure what the timing is. At this point, we don't know what the timing is. And so it's a little bit difficult to predict. And I'm sure that others have seen some research, but that would be my number one thing is that, folks have to remember that we have to continue to meet this moment, as the governor has said, and step into these actions of staying at home and being safe so that we can eventually control this curve.
I think this goes back to what I kicked off with, which was, as soon as we launched this webinar, I was getting emails and dings about, additional funds already being, they're going to vote on. And again, this just came through, so I don't know if it's actually going to happen, but another 250 billion being put on the table and considered for a vote this week. So I think all along, the wide view was that 350 billion was not going to be enough, and that there would have to be more. President Trump said over the weekend there would be more. So I think the idea is what Isabel was saying. The goal of this really is to get money into the hands of small businesses so they can pay their employees, so that their employees can feed their families. And that's what this is all about. So I think that the government has committed publicly, from multiple sources, that they're going to continue to fund this so that people can get relief. And one other thing I'll say is, this is really sad to hear this, but we're starting to hear a little bit of noise about fraud. And the fraud is coming from people claiming to be able to help small businesses get these loans, because there are certain fees that they can get for this. And not there's perfectly legitimate people who can help. But the fraud that we're hearing early on is that kind of fraud, where somebody's calling you, they know you're desperate, they know that you need this money, and they're taking your information or doing other things to take advantage of small businesses. So my big takeaway for all of you participating is, this application is not rocket science. I know we said a lot of stuff about detail, but you can do this, and you don't need to have somebody take all of your personal information and do this for you. This is intended to be accessible to you to be able to do on your own. So please be aware of and be on the lookout for any kind of fraud like that, so you're not taken advantage of. Thank you so much.
Great. Go ahead, Edward.
I would say, no, we're not done. There will be more funds required, and it's going to take longer than we think it's going to take. What we're encouraging our clients to do is deal with their immediate cash concerns right now and address them and take the steps that they need to take. And then look at their business very carefully and with a very sharp eye in what's going to happen to profitability, how may business models get pushed and changed, and what changes might they need to make with a longer term view. And so what we all want to be able to do is to come out of this thing at a point in the not too distant future with the ability to make money and not have too much wreckage caused by what we've been through. I don't know. That's the $64,000 question, John, for sure.
That's great. Okay. Well, listen, so thank you very much, the three of you, Isabel, Maria, and Edward. You've been wonderful. You've been very generous with your time, and you've answered questions really successfully and really well. So thank you also to our participants. Thank you for supporting the Bay Area Council. We need you through this time. And with that, we'll wrap up. I would add, I'm sure that the three of you, in particular Maria and Edward, are available for individual consultation if folks have some follow-up questions that they'd like to ask. So for those that were online, we will share contact information for how you can reach out to them. So with that, I will close, and thank you so much to all of you, and have a great day. I hope we all get through this successfully. Thank you.
Thanks.
Thank you.